Hey guys, my name is Denise Merritt, and I am the CEO and founder of Merritt Business Solutions. Merritt Business Solutions started 5 years ago with the sole intention of helping businesses navigate the complex world of human resources. As a certified woman owned business and LGBT business enterprise, we are passionate about helping minority businesses achieve economic equality. In my 30 years of experience, I've been able to assist businesses by helping them reduce their labor cost and liability by outsourcing their employee administration. Everything from payroll, HR, benefits administration, unemployment administration, risk management, and more. Our goal at Merit Business Solutions is to see you be successful, and our approach is consultative and educational. And that's why we want to share with you topics that you should be asking about. And if you have any questions, feel free to call us. Our motto is at Merit Business Solutions, we keep your business on point by doing the right thing, always. We look forward to working with you soon and hope you enjoy the webinar.
Hey guys, I'm Mandy Waters. I'm an account manager at Merit Business Solutions. As Denise said, our goal is to see you be successful. I started a business 10 years ago, just like many of you, with a good idea and an urge not to want to work for anyone else. I took advantage of most of the resources I found online. However, it was the questions I did not know to ask that caused me the most amount of wasted time and money. We welcome you to ask questions. There will be a Q&A session at the end. Feel free to put your questions in the chat box and I will bring them up at the end of the presentation. Also, expect an email at the end of the webinar to let us know how we did. There is a section for topics. So if you need more of an understanding of a specific topic, let us know and we'll find a specialist to be able to explain it further. Today, I have Dreamma Mendoza, who has graciously offered to come on and explain the Secure Act and the upcoming Secure Act 2.0. Dreamma has over 8 years in the insurance, HR, HCM, and retirement industry. She sits as a foundation director for the Greater Orlando Society of Human Resources. Currently, she works as a partner account manager for Human Interest. Human Interest offers an automated and user-friendly system that simplifies and ultimately lowers the cost of having a 401k, and has recently been just rated #1 software by G2 for all your 401k needs. Dreamma, thank you so much and welcome.
Yeah, thanks so much for having me today, guys. Really appreciate it. Was really excited to get the G2 rating, so that was fantastic. It was just announced maybe about a week ago. So today we're going to talk a little bit around the Secure Act and just give you a very high level understanding of what it means for especially the small businesses, not only here in Orlando but across the U.S. And so disclosure, right? I'm not an advisor. I'm not telling you what to do with your funds, but know that we're here for education and to help you with what you're trying to accomplish. As Mandy mentioned, I've been in the industry for quite a while, and a lot of my time was actually spent in HR. And so I had a really big focus in the staffing, talent, training, recruitment, and then even doing a little bit of the general work. And in my time there, I definitely saw and understood what was going on in some of these departments. And it created an urge for me to go out and help these folks to streamline things and be more strategic and kind of get out of those, the tactical work and into that strategic initiatives. And so today, we're going to learn a little bit around the Secure Act and what we're able to do for you from a 401k perspective because of legislation and what the government is trying to do. And so essentially, what is the Secure Act? So Secure stands for Setting Every Community Up for Retirement Enhancement. This is legislation better known again as the Secure Act, and it was introduced back in 2019. This act was specifically designed to increase access to tax advantages and accounts and prevent these older Americans from outliving assets. So we know today that there's about 100 million Americans with no access to retirement outside of Social Security. And so the Secure Act has been one of the most significant pieces of retirement legislation in over 13 years. And it puts into place many different provisions that affect these employers and employees across the country. And again, specifically through the small businesses. So, let's go ahead and break down what those key implications are for those employers. And so the biggest thing here that's going to affect these small businesses are bigger tax credits. And Unlike deductions and exemptions, which can ultimately reduce the taxable income, tax credits actually reduce the amount of taxes owed. So most business owners really love to take advantage of different tax credits that may be available to them. And so Uncle Sam essentially went out and created not just one, but two different tax credits for small businesses to set up retirement plans. Now, keep in mind, when I say small businesses, these are 100 employees or less. So to qualify for what we're going to discuss, you have to sit at 100 employees or less. Now, first, the Secure Act increases what's called the retirement plan startup cost tax credit. That is a mouthful. Essentially, what they did is they increased the amount that you can claim up to $5,000 per year. The setup tax credit is available for these qualified small businesses for 3 years. So this isn't something that you only get the year that you start the plan. It's actually eligible for you to receive for up to 3 years. Now, the second piece is that the bill introduces a brand new tax credit. That's an additional $500 per year for any business that adds an automatic enrollment feature. And this could be to a new or an existing plan in place. Between these two tax credits, those eligible small businesses can erase up to $16,500 in taxes over a 3-year period. This is a pretty big chunk of change. Now, the other benefit as an employer that you receive here is that the Secure Act extends the deadline to create that workplace sponsored plan. So this can ultimately make an eligible for tax through tax filing. So the deadline for them to adopt a new traditional 401k plan now is no longer the last day of the tax year. Now it's actually the due date of that year's tax return, and that does include any extension. So if you filed for an extension, that will be included. Now, where this is really important is not only with the tax liability, but it's also another really great hiring and retention tool, because now those employers have extra time to process new workplace plans and allow employees joining between January 1st and April 15th to delay taxes on retirement savings for the previous year's return. Now, the second piece of this is the Secure Act 2.0. In May 2021, the Secure Act 2.0 passed unanimously. So this means a lot of people really see the benefit in what we need to do as a country to essentially enhance our retirement process as Americans. And while it doesn't provide a broad fix, the Secure Act 2.0 does build on the improvements that the Secure Act has already introduced. And it's in a variety of small yet very significant ways for these businesses to save on retirements. So the biggest change is going to be not only the automatic enrollment for eligible employees and plans, because that will be a requirement, but it also enhances the amount. So today you can receive 50% of your administrative cost in the Secure Act to write off and get that deduction on your taxes. However, essentially what the Secure Act 2.0 does is it says, okay, you have to automatically enroll at least 3%, but not more than 10%. There are a few exceptions. That does include small businesses that have fewer than 10 employees, new businesses with less than 3 years in experience as a business, and then churches and government facilities. Now, employees can still opt out of those plans. So we're not saying, and the government is not saying that your employees have to participate in these plans. They're saying you have to enroll them and then they can opt out. And the reason they did that is because research demonstrates that it can be a really effective method to jumpstart retirement savings and make savings a habit for people. And then again, those existing plans that are in place already are not going to be required to add auto enrollment when that 2.0 goes under the new proposals. So I know I also touched base that it's going to double the tax credit. So right now, up to 100 employees, the current Secure Act covers 50% of your administrative costs as a business to run the plan for 3 years. The Secure Act 2.0 increases it to 100%, essentially making the cost of running a 401k and providing the benefit next to nothing for the employer to offer and give those employees the option of starting to save for retirement. This, of course, then increases the ability that you're able to save along the way. Now, the other difference here is that the employers also now would receive a new tax credit, and that's a percentage of the amount contributed by the employer on behalf of the employees up to a per employee cap of $1,000. And so what that means is that's talking about the match. if you decide or elect to say, we're going to do a 3% match, the government essentially is saying, we're going to provide you a tax credit to cover up to $1,000 that you're going to match for this employee to write off on your taxes. Now, I understand this is a lot of information, very short amount of time, very high level. If you want to learn more, we have a lot of information out there for you to take a look at, learn more about not only the existing Secure Act, but the upcoming Secure Act 2.0. Again, thank you, Merritt, for inviting me on. Appreciate the invite and being able to share some of these amazing things that are going on for these small businesses.
Awesome, Dreamma. Thank you so much for joining us.
Yeah.
There are a couple of questions
Okay.
that we wanted to go over.
Okay.
We have, is there a size of a company? Is there any limit?
Yeah, so that's going to be that 100 employee mark. So anybody under 100 employees, you could be a single solo proprietor running your own company, 5 employees, 15, 30, 40. But as long as you're under 100 employees, I will say the only difference that'll happen is if, let's say, year 1 you're at 80 employees, and then year 2 you're at 90, and then all of a sudden at year 3 you cross that 100 mark and you had 120 employees. That 3rd year you're not going to qualify for the credit, but you will qualify for the years that were before that.
Great. Is there a tax date, or is there an extension that can be used? What if people pay their taxes quickly and early?
Yeah, so again, that's going to be based on that tax that you're filing as an employer, right? So it doesn't matter whether you're an S corp, an LLC, your tax deadline could differ and your extension could differ. And so essentially what the government did is say, we're going to match your deadline. So if you're somebody who's filing by the 15th, then you have by the 15th to start and enroll. If you're somebody who has an extension through July or October, then now you have through July or October to start that plan and reap the benefit of it.
Awesome. You had also brought this up earlier, how employees are auto enrolled. What if we enroll our employees and employees want to opt out? Can they?
Yeah, they absolutely can. So I understand sometimes, and again, coming from HR, I know how that can sometimes be a little scary when you look at it and say, wait, the government's going to make me auto enroll all my employees. I just had a conversation the other day with somebody about this, and they're like, I don't want to create any type of mistrust with my employees. And so essentially what you're able to do is you do have to auto enroll them with the Secure Act 2.0. That's non-negotiable. Here's the beautiful thing. You blame it on the government, right? It's not on you. It's not on us. This is something that they're required to do by law. But you do give them the ability to either increase or decrease their contribution limits or opt out altogether. They do not have to participate if it's something that they elect not to. But I will say you'll oftentimes find that those employees want to contribute. The ones that are hourly that you feel like may not, they do. Even if it's 1 or 2%, putting something away is better than nothing.
Definitely. Now, what most employers are thinking about are, do they have to make a match?
No, that's another really big misconception. So the beautiful thing about the Secure Act 2.0 is that if you do want to, the government will start to help you offset through tax credits, and doing that just to try to increase the participation within the plan to help these Americans start really investing in themselves and investing in their retirement. Because right now there's 100 million Americans that don't have any access to retirement. And so how can we help offset that is kind of what the government has said by implementing some of these legislative plans.
Perfect. Now, Jessica had the question, when is 2.0 expected to pass?
Yeah, so right now it's not in effect, but it is expected to pass early 23.
Awesome. One last question. How can a 401k help with your tax liability?
Yeah, so that's actually a really great question. So not only do you have these really fantastic tax credits with the Secure Act, you also have what's called profit sharing. And so profit sharing is something that most providers do. Not to commercialize human interest, but this is something that we can do just by a flip of a switch when and if you're ready. But essentially what it does is it takes the tax liability that you may owe as a company. So if you say at the end of the year, you go to file your taxes and you find we owe $20,000 to Uncle Sam, what you could actually do is flip on the switch for profit sharing. You could take $10,000 of what you owe the IRS and kick it back into your 401k plan through profit sharing. And now you're giving back to your employees, you're giving back to yourself, right? Whether you're in management, you're an owner, or you're a worker, and you're saying, look, Mr. and Mrs. Employee, we care about you, and we would much rather take this money and invest it in you and your own future than pay it into taxes, right? So we're not saying that you're evading taxes, but it's just a more strategic way to spend your financial assets in giving back to your employees who are there for you every day and showing how much you care for them, opposed to paying more into taxes.
Awesome. Dreamma, I can't thank you enough for coming on and explaining that.
Yeah.
If there's, we look forward to additional topics with you because you're always great to talk to. Everyone, thank you so much for joining us for our very first Merit and Friends webinar. We look forward to seeing you again soon. Have a great and wonderful rest of your day, guys.
Thanks so much, Mandy. Thanks, Denise. Have a fantastic day, everybody.
Take care.